What's up, guys? JJ Fade 23. I'm just going to make a quick video going over the watch list and why the setups today. A few people in the room were asking me. So, you know, I always take care of business. All right. First things first. Friday. I'm always extra careful on Fridays. I only want to trade A+ setups from my playbook. I don't stray a single bit because Fridays are always tough. That's just not good. And, you know, they can be a little crazy. So, all right. Watch list from this morning, you guys. Here's the watch list. No, that's the second time I posted it. Watch list. We don't want after the fact watch list. Oh, here we go. All right. 9:02 a.m. All right. So TSLA MU and MSTR were the top watches for large caps. All right. So let's take it back here now. TSLA, guys. All right. First things first. We longed TSLA yesterday. All right. Now, guys, yesterday, I've already seen this fake breakdown right here. I see this wedge. Let's delete all this crap for now. All right. Go over this from the beginning. All right. Major trend line. All right. Major trend line. Upper trend line. Wedge pattern. Okay. What do you want to call this? A flag? Call this a wedge? Whatever. Now, I would have taken this long this day when you did a fake breakdown if we didn't gap up so high the next day. Let's say we only gapped up to right here. I would have definitely taken that long, risking below here, because that's a fake breakdown of a very key level. Fake breakdown is a long trigger. Number one, you have a fake breakdown of the trend line, plus you have a fake breakdown of this key level right here. So if we gapped back up the next day, sure to be trapped, I would long instantly aim for this target. So yesterday we had a gap up on earnings. I knew we had an upper trend line target. The watch list said yesterday, try to get in TSLA on a pullback, aiming for this first target, 260, and then et cetera, the resistance, and then aiming for 300 ultimately. So yesterday, I'm not going to go over that setup because I don't want to make this video too long, but it worked out perfect. We aimed first target, we hit it perfectly. Now, guys, TSLA has this wedge pattern that I'm assuming we're going to break. You know, I was a little cautious because I didn't know, well, maybe we hit that wedge and come all the way back down to here. I doubt that will happen on earnings. But point is, you always have to be aware of what could happen. So today, all we see today is this super bullish day yesterday. I expect continuation to be able to break this pennant today. All right? So now, what is the setup? The setup is this. On a breakout, if we didn't touch the 10-minute 21 and 34, this is the 10-minute 21, this is the 34. This is with pre-market data are off. If we didn't touch this all day yesterday, the first pullback into the 10-minute 21 and 34 is almost automatic. All right? I don't care what chart you're looking at. If it's a breakout on the daily chart or an earnings play, the 10-minute EMAs are my favorite thing to use because this happens over and over and over and over, and I'll show you the same thing on MSTR. So we didn't touch this all day yesterday. So the plan this morning was TSLA, if we dip or gap down into the 10-minute 21.34, we're going to buy it. What do? We gap down right into it. We long, boom. And now we're just using the 10-minute EMAs as a guide. I actually took a long right here, boom. Right as soon as this opened and dipped, as soon as it went back through the open price, long. And then I came up here, and then when it came back down and we wicked off the 21, I added. Now I have 3 adds on this trade. I had the first long right here yesterday, added again. Now, day 3 will be tomorrow. I'll start taking a little profit into day 3 and then leave a swing on for hopefully 300. But that is a very basic earnings play that I track, that I save in my OneNote, that all do the same things over and over and over. All right? Guys, this isn't like I just made it up yesterday. All right? This is literally, look, my OneNote with earnings gappers, all right? It's the same thing. 10-minute EMAs, first pullback. 10-minute EMAs. Look, gapped up on earnings. Boom, pull back to the 10-minute 21. Pull back to the 10-minute 21. This is, you see, this is not make-believe over here. This is all my setups that I master like the back of my hand. All right? So that was the easy TSLA trade, automatic. Now, MSTR. What was MSTR? Same setup. Why? It's not an earnings play, right? No. It wasn't an earnings play, but look, you guys. this is just, if, look, do you see this? Yesterday, we had a daily breakout, okay? When we have a daily breakout, now I look to see how the 10-minute EMAs are looking. If we get extended from them, I want along the first pullback. So yesterday we came up to the breakout level, we pulled back to the 10-minute EMAs, and then we broke out over the daily level. If we break over the daily level and don't touch the 10-minute 2134, after we break out, the first pullback to the 10-minute 2134, I'm longing. So here we go again, right? We look at this whole day yesterday after we pulled here. After we broke out yesterday, we didn't touch the 10-minute 21 till this morning. This morning we dipped, we opened, dipped down, boom. As soon as that goes back up, long. And then this is different than an earnings play. Earnings, you can pretty much, a lot of times can have 3 days, you can have weeks, months of running after earnings. This one was more of a day trade. You long it, scale out, maybe put your stop at even. Because you don't want to, this might not have the power that Tesla has, because Tesla's running off amazing earnings and so much more hype that it just keeps going and going. But same exact setup, you guys. All right? Breakout, first pullback to the 10-minute 2134. You see the candle wick of it, boom, you go long, put your stop below the 34. Or you can, when you're really profitable and you're doing good, you can jam your stop right below the wick that you get. Sometimes I teach newer traders to use a wider stop, and that will solve most of your problems. Yes, your risk reward isn't as good, you don't get as many R's, but guess what? Once you're rolling and your account's growing and growing and growing, then you can play this game. Comes down, goes up, comes down, wicks down right here, almost touches it, goes back up, boom, long right there, you stop right here. Now you have these multiple R trades that are just crazy. So, and then last but not least, MU was on the watch list, because MU, we were already swinging this from here. I'll show you guys MU setup. Let me delete these. Oopsie. MU, guys. MU, another earnings gapper, okay? MU gapped up on earnings over here. And it pulls all the way back to the daily EMAs. Guys, when I have all these daily EMAs and support below, I start looking for an entry. All right? So I'm watching it come down to here. I go like this. I put my trend line on. We get a bullish engulfing candle. Boom, I'm long right here. Long, risking 100, because 100 is a whole psych level. Actually, on this one I risked 99. But guys, the reason for the long is not just a technical pattern. It's the 100 psych level too. Once I see us go below and reclaim 100 psych level, I'm all about that. So we longed it down here. Now it starts to run. Boom. I didn't take any profits up here. Why? Because I got diamond hands, baby. I want to fill this gap. That's where I'm taking profits. So what happened? Why did I put it back on the watch list today? Because this is my target. Look, we came up real close to the double top. We pulled back. We got an under, over, reclaim, and now we're starting to grind back up. This should ultimately, if we held the EMAs again, this is also wedging here. This should ultimately go back up and break that wedge, unless the market totally shits, unless SPY dumps a mile. This should eventually, maybe we come back down to here again, make a higher low again, and eventually head back up to the trend line. But I will not cut this unless it breaks 99. So swinging this, you could have taken it here, added or take some off and then add it back right here, whatever. You just have to realize wherever you're buying it, you're risking 99. I hate when traders go like this. They buy it at 105 and then they stop out at 103. Or they buy it at 104 and then they stop out right here at 103. Like, dude, what are you doing? The key level's here. You have to use the daily chart, or else you're stopping out in ridiculous places. That would be like taking a short on this day. If you're trying to short on this day, right, and you're stopping out before this level, dude, good luck with that. This is the real, guys, think of it like this. You have to, when you take a long or a short, you have to look on the daily chart and say, where is the last true place the stock failed? All right. So if this is grinding up higher, the last true place it failed to go higher was right here. Well, that's the resistance in. Stopping out in front of that is silly. Now, if you're buying a dip here or here or here, where is the last true place it failed? Right here is the last true place it failed to go lower. So it has to be your stop. So don't buy the stock up here if you're going to stop out right here, because then you're just fucking yourself. Now, don't get me wrong. If you're day trading, you can find intraday setups that are good. You just get the directional bias of the stock. Let's say this day right here, right? Let's say it came down, went up, pulled back down, made a higher low right here. Now it's going up over this candle's high. Okay, if you want to take a day trade in there off an EMA or something with your tighter stop, go ahead, but you can't swing trade like that. Swing trades, you have to look at the chart. You know, you can't be buying this for a swing and stopping out before this level. All right, that's crazy. It's just the way it is. All right. I mean, unfortunately, sometimes you don't get good trades because look, this dumps, it bounces back up to here. Do I want to short this right here? No, because I have to risk off right here. I would have wanted that to come back up to here for me to short it. Otherwise, I'm just putting in. That's not going to be a good swing trade because my stop would have to be somewhere ridiculous. Day trade again is different. We have different setups for that. I'm just talking about swing trading right now. So ultimately, guys, this is the way it is. All right. The reason why I took this trade is because, but why was it on the watch list again today? Because I saw it come down, held this trend line, bounced up, and now we can take it back to this target. So today I didn't wait for a dip or anything because we're gapping up on top of yesterday's high and gapping up over the 10-minute EMAs. So what we did in the room was we waited for this to dip. Once it goes back through the open price, long. And then, you know, I was already long from down here. So up here, we're just talking about day trading a little or scaling in some. And then if you pull back down to here, add. Anyways, right now it looks like SPY had a big dump, which we were talking about that in the room. Obviously, guys, you guys know how I trade. Lower high position is a killer of stocks, all right? So this is lower high position. Anywhere above the 78% fib means you came up close to this. So you can. That's always the best place to short. Guys, if the stock failed right here, the best place to short is lower high position. So you can risk off the true high. Lower high position so you can risk off the true high. Lower high position so you can risk off the true high. Guess what happens to people that short right here? They short this breakdown. They don't risk off the true high. They get stopped out. Right? You have to, if you're swinging, you have to risk off the true last place it failed. All right? So basically, if you're longing over here, right? Let's say you have key support right here, right? You want to buy this dip over here. You want to buy this dip. That's fine. Your stop needs to go below the real last place it failed. You can't long right here, all right? For example, all right, this is a good example right here. Let's say this day it gaps up right here. You see it's on top of yesterday's high. Now, if you want to take a swing trade on this, you enter right here and you put your stop below that candle. Guess what you just did? You just stopped out way above the actual support. You just stopped out at an irrelevant place. Yesterday's high. Now, ideally, you want to get your entries as tight to the 10-minute EMAs as possible so you can risk off the true low or at least risk below the 10-minute EMAs. But if you're taking a long right here and you're not having your stop down here for a swing, you're just asking to get stopped out. That's why I don't buy breakouts and I don't do any of that. I buy pullbacks to the key levels that I love. The key levels that already proved to me that they work. All right? This is actually a secret long. You see the 10-minute EMAs cross to the upside. You did make a higher high, and now you're just looking for a pullback to higher low position, which was right here. Anywhere between the 61 and 78% fib. And it touched it right here, but this is the real entry. Risk in here, and then it goes. So, beautiful. And then yesterday, guys in the room were starting to realize, too, they're getting better and better at seeing this, right? Yesterday, if you wanted to go long, guys, anytime you get a... Look, everybody knows I longed SPY on the wick down. I made a video about it. I longed SPY on the wick down to the daily 2134 in this breakout retest. Whenever you get a big daily candle, a bottom tail like that, the next best long trade is a dip back down towards that low. So, and now what do? Look, we had this huge bottom tail and then a gap up. Do I want to buy the gap up right here? No, I want to buy as close to this as I can. Well, how do I know if we're as close to it? As you can see, my circle's there. Why? Because when I tell everybody where to go, it's always in higher low position. Look. Yes, between the 61 and 78% fib is where it mostly happens. But the closer we go to the lows, the better without all the way going down here. If I get filled on here, I put my stop a little below so I don't fall for a fake breakout. But if you're not buying it in higher low position, the next best trade is a fake breakdown or a stuff candle or some kind of trigger at this double bottom. So it's either one of those ways usually, higher low or trigger on a fake breakdown or double bottom. But people in the room said, hey, SPY's back into the higher low position because they know they're getting used to it. The 10-minute EMAs cross to the upside. We kind of made a high over some shitty levels, but not really over a real resistance level. It was questionable, but the pullback was deep enough to get risk off this level. And then guess what? 576.50, risking $2. Well, guess what? 850, 850. That's easily a 3-hour trade. Boom, bang, boom. You want to get at least 3 out. Now, fibs, people can hate on them. Fibs and EMAs, baby, a way of life. I don't care what anyone says. Because guess what, you guys? Look, high or low position. You see it touch the 61 fib. Well, guess what? Look. High or low position. High or low position. High or low position. Look. Higher lows and lower highs happen all freaking day in the stock market. Look, 61 to 78% fib. It's literally like all over the place. It happens on so many pullbacks, like I showed you over here, like I showed you right here. Even like these little tiny ones, guys, sometimes, right? Look at this. You see this? It goes up, it makes a higher lower here. Where do you think that higher low came to? Well, look, even on this little mini friggin' chart. Right back to between the 61 and 78% fib. Right? It happens so much. It's crazy. Now you add that, you line that up with an actual setup instead of just trying to take every lower high, every higher low and go, this doesn't work. What the heck? This doesn't work. No. How about you line that up with an actual setup? Now you see some fire. Right? Anyways, I don't want to make this video too long, but my whole thing is volume, price action, candlesticks, patterns, EMAs, and Fibonacci's. It's pretty much all I use because they work. And I'm always saying you put yourself in the best risk-reward position if you wait for higher low to long or lower high to short. So what that means is, just like I was just talking about, guys, what that means is this. If you want to take a short on SPY, you want to be shorting up here somewhere, right? Hold on. If you want to be shorting on SPY, you want to be shorting up here so you can risk off the true high. This day when we had the huge gap up and stuff, right? If you wanted to be shorting that bounce, you need to short above the 61 fib so your risk reward is good. And also the trade has a better chance to work. Why is that? Why does the trade have a better chance to work if you use the fibs? Well, I'm going to tell you right now, all right? Watch. If you get a huge gap up and dump, right? A lot of people might long down here. Well, guess what happens, guys, all right? You put your fibs on. Anyone who longs down here is going to try to sell as it goes back into the highs, right? So you have sellers up in lower high position. Also, anyone who wants to short the bounce has the best risk reward up in lower high position too. So you have more sellers up there, right? So it's like, and the same thing with longing, okay? Anyone who wants to buy the dip on SPY right here, guess what? If you shorted, you're going to take a little profits as it comes down into the support again. And if you want a long, your risk reward is best if you wait closer to this low. That's why the fibs at a 61 to 78% fib works so good, in my opinion. It's just, it is what it is. It's the best place to long and the best place to short, as opposed to buying a breakout and now you're way off the true last place it failed and then you just get stuffed on, which is crazy. Even if I'm buying a breakout, like I was saying on MSTR, right? I'm not actually buying the breakout. I'm buying the pullback into the breakout level and the 10-minute EMAs. By the way, I forgot to mention that. This one was even better because you were pulling back into the breakout level plus the 10-minute EMA, so that's confluence, right? Confluence, plus you got a whole dollar right here too. I like whole dollars on large caps. So, anyways, all right. That was pretty much it. I don't want to make the video too long, and that was for my man. That was for my man Tyler. All right, thanks, guys.